students. Let us now continue chapter number 2 of your part 2, depreciation, a very important concept from accounting point of view. We all are using so many assets. When we use the asset, the value of the asset decrease, its utility decrease, its capacity to function deteriorates. So somehow we have to consider this particular aspect, that when the assets are used by the businessman, whatever is reduction in the value of an asset need to be recorded in books of account. Then only you get the true and fair balance sheet and true and fair valuation of your assets. Otherwise, whatever you are mentioning in the balance sheet on the asset side, the value, that value may not be the correct value. So depreciation is one account which gives us the correct picture of our accounting values of asset. Now depreciation you may charge more. If you charge more, then your profit going to be decreased. If you charge less, your profit may be more, but it's not as per your wish whether to charge more or less. It has to be done as per the legal order, as per the income tax guideline, as per the accounting standards. So accounting standards pay and emphasize on the concept of depreciation. So now let us see what depreciation means, how the depreciation calculated, and which are the methods of depreciation. So the first, the depreciation. Depreciation is the regular and a permanent reduction in the value of an asset. We are reduce the value of an asset. Now this reduction may be for any reason. There are so many reasons for reduction in the value. Number 1, because you are using. Number 2, the passage of time. Number 3, due to the natural factors, the value of an asset deteriorate. Number 4, due to the changes in the technology and due to the changes in the research and activities took place. So there may be any reason. But one thing is sure, that whatever is your value of asset, it decrease due to various reasons. So now this reduction we have to express in our books of account, that is what depreciation. Now this depreciation is compulsory. You can't say that I don't want to calculate depreciation or want to record. As per the income tax law and the provisions and as per the Companies Act, calculation of depreciation is must and need to be recorded properly, need to be calculated with proper appropriate method of depreciation, and frequent change in the methods of depreciation to be eliminated, to be avoided. So the next point is the method of depreciation. Depreciation can be calculated. All businessmen are free to use any method. The only thing is, whatever method you opt for, try to stick to the method and avoid the frequent changes in the method of depreciation. The reason is that with the two different method, you will be getting two different depreciation amount. So it has a direct effect on the profit and loss, because depreciation we are recording on the debit side of profit and loss account. So it affect your profit. So method need to be selected appropriate and not to be changed so often. Let us see the methods of depreciation. The very first and commonly used method of depreciation is straight line method, or you can say the method which is a fixed installment method. So straight line method, the word itself says straight. Once you calculate the depreciation, till the life of the asset, you are not going to calculate depreciation again and again. It is simple to understand, it is easy to calculate, and it required less calculations, and your energy and efforts are required less. So most of the fixed assets are depreciated with the straight line method. The assets, the intangible assets like goodwill, trademark, copyrights, all are also depreciated more with the straight line method. We are going to study the calculation formula of the straight line method and its journal entries later on. First, let us go through all the methods. Number 2, that is the written down value method, WDV. You can also call it as a reducing balance method. Here, whatever depreciation you have calculated, the rate is given to you. On the basis of the purchase price of an asset, based on the rate of depreciation, you calculate depreciation for the first year. From the subsequent year onwards, after deducting the depreciation on a new book value, we have to calculate further depreciation. So, every time reducing balance method or a written down value method, it means every time the new value to be found, and on the new value the rate is applied which is consistently followed the same, and you keep on reducing the value of your asset. In a straight line method, the depreciation is calculated up to zero value of an asset, while in the reducing balance method, never your asset value become zero. Number 3, annuity method. Now these two methods, we have an example and we are going to learn these two methods with the practical example. Now all the rest of the method, just for our information that these many more methods are there. Later on you will come across with the calculative sums of the different methods. So annuity method, which is function based on the annuity table, and this method is used by a particular group of business activities which are carried on. Next is depreciation fund method. All the three depreciation methods are not considering the interest on capital invested in the asset. So, and the second thing, you need to replace an asset after a particular life of asset. When the question of replacement arises, you need funds. So, depreciation fund method says that what depreciation you charge, you invest into the fund, sell out the fund when you need to replace your asset. So, the concept of replacement of an asset can be solved with the help of the depreciation fund method or depreciation provision method. All the method, this is also known as a sinking fund method. So these are the various names of various methods. Next is that is insurance policy method. Insurance policy method also solve the problem of repurchase of an asset. You are taking insurance policy side by side when you acquire an asset. As the asset deteriorates its value and you need to replace an asset, your policy going to be matured and the funds available from the policy help you in replacement. So fund can be acquired from the policy amount. Revaluation method. Revaluation, as the word say, value it again. In the beginning you have one value, at the end of year you have one value. The difference of these two values, whatever deterioration took place, that is your depreciation. Very simple. For the miscellaneous assets, you follow the revaluation method. Then compound interest method. Again, like an annuity, the compound interest rate is applicable on the asset and accordingly you charge the depreciation. Then you have the depletion method, mileage method, machine rate hour method. All these three methods are particularly for a particular character of an asset. Here the depletion method used mainly for the mines. Whatever you are extracting from the mines, either a oil well or a coal mine or a gold mine, whatever you dig it out, accordingly depreciation to be calculated. Mileage is for the vehicle. As the mileage, the vehicle is used, according to the mileage, the use of an vehicle, the depreciation to be calculated. Machine rate hour method. Here more machine is used, more depreciation to be calculated. We calculate the per hour depreciation and then we multiplied with the number of hours the machine is used. So all these three methods are like that. The particular character of the particular asset, the suitable method to be utilized. Now let us concentrate on the first method, that is the fixed installment. Why it is said fixed installment? The amount of depreciation going to remain fixed till the life of an asset. That's why it is known fixed, or the other name is straight line method. Once you calculated, it remains same. No need to calculate again and again. It is straightforward. It is simple. So that is the name of a method. This method is more convenient, more suitable, easy to understand and preferred by most of the small business unit, those who are running their business. Now the formula, you need to use a formula to calculate depreciation. The depreciation is equal to cost price minus the scrap value divided by number of year useful life. How long the machine you can use. Second, after calculating depreciation, we derive the rate of depreciation. The rate means in a percentage, how much percentage depreciation you are calculating. So, your depreciation, what you have found, the amount of depreciation upon the cost price into 100. So, you need to remember these two formula for calculation of depreciation and its rate in case of straight line method. Now, let us take one illustration to know the answer. The illustration is, suppose the cost of machine is 2,10,000, the scrap value is 10,000 and the life of an asset is 10. So as per our formula, D is equal to C minus S upon N is equal to your 2,10,000 minus 10,000 your scrap value upon the 10. So you will get 2 lakhs upon 10 is equal to 20,000 is your depreciation. So every year 20,000 depreciation you are going to charge. On the same way, you find out the rate of depreciation. You have the amount of depreciation 20,000 upon the cost of depreciation, that cost of machine is 2 lakhs into 100, you will get your answer, that is 10%. 10% of 2 lakh, you will get 20,000. So your rate is 10%, your amount is 20,000. Now you know, we have learned the journal entries. At time of our journal chapter, we have written the journal entry. At time of our journal proper, depreciation is one of the adjustment. So in journal proper, we have learned the adjustment of a depreciation. So when you purchase an asset for the first time, in the first year, you have to write the entry. Asset comes in the business. So asset account debit to bank account to cash account. As per our illustration, asset account debit. You have purchased your asset. Okay. So asset account debit, suppose 2 lakh is the value of your asset. Out of these 2 lakh, 1,90,000 you have given the bank check and 10,000 you have given the amount for installation of the particular machine. So the first entry being asset purchase and installation charges paid. So this way you have to write the purchase entry. At the end, you have used the asset for 12 months. At the end, you have to write the depreciation entry, which is compulsory for you to write. So depreciation account debit to asset account. How much figure we have calculated of depreciation? 20,000. So to asset account 20,000. So these two entry, number 1 and number 2, you are going to write when you purchase an asset, when you depreciate an asset, and third, when that depreciation we transfer to profit and loss account. So profit and loss account debit, you remember in our journal proper, we have understood the closing journal entries, closing transfer entries of every account. Depreciation is one of the nominal account. So nominal account are to be closed and transferred to profit and loss. So entry number 1, 2 and 3 you have to write in the first year when you purchase an asset and depreciate. Now from the subsequent year, second year till the 10th year, we are going to write only two journals. That is journal of depreciation and the journal of transfer to the profit and loss. In this manner, the first fixed installment depreciation method example we are going to do from next class onwards. Thank you.